All right, welcome back, traders. John Caruso here, August 12th. We're going to wrap up the week here for you. Obviously, it's been a very busy week in terms of some of the market data that we've seen come out. CPI, PPI, both starting to show signs of decelerating here on a month-over-month and year-over-year basis. We did see the headline CPI number come out at 8.5%. That was down from its prior reading of 9.1%, and I believe the market was expecting 8.7%. So better than expected. Starting to see some signs that inflation might start to peak and roll. However, you got to be careful whether or not this is the beginning of a trend down in inflation, or if we're likely to see inflation just simply chop in the eight handle and remain potentially very stagnant and sticky high on the upside. So we won't know that, obviously, whether or not we're starting to see a trend in that, probably until about October. So keep that in mind. Stock market obviously loved it here. We've got the S&P charging higher right now at 4230. You got the NASDAQ right around 13,400 and the Russell 2000 right around 1985. Not getting in immediate term overbought signals quite yet in the S&P or the NASDAQ. However, we are very close. And actually at one point yesterday, the Russell did flag immediate term overbought above that 2000 level, and quickly that kicked back down to 1975 late in the day. Taking a look at the Euro USD. Euro USD is down about 40 basis points here this morning as Europe remains on recession watch. There was a report that was put out by the economic ministry last night saying considerably worse outlook for German economy in the second half of the year due to reduced gas deliveries, further increases in energy prices, and furthering of the supply chain problems over there. So in our models, Europe still remains on recession watch and could be a number one risk to United States markets in the back half of the year. So pay attention to that. Oil prices are down 1.72% here this morning. Gas down 1.89% this morning. Both remain bearish trend. I know that's wildly unpopular to the market. Obviously, we've all heard of the secular bullish supply side fundamentals longer term. However, as long as that market remains bearish trend, we're going to be looking at approaching that from the short side. If oil prices were to recapture 102, that should be a clear-cut signal that you should be pulling all bullish bets to the sidelines and waiting and watching for that next bearish to bullish potential phase transition. 10-year yield right now is actually giving me an immediate term overbought signal right now at 289. I do think we can maybe stretch as high as 3% one more time before we start to see yields come back in, prices back on the upside. You got to remember, you've got a very inverted yield curve right now. It's minus 41 basis points. The last time we've seen a curve that inverted was back in the year 2000, of course, the dot-com bubble. So best of luck to everybody out there. Hope you have a great weekend. We'll catch you back here on Monday.